All right. What's up, traders? What's up, tycoons? Super excited for today's video. We have to talk about Sphere 3D. This is ticker symbol ANY. Let's just call it ticker symbol any. All right. And we have two bullish chart patterns. We have a falling wedge and an inverse bump and run pattern. We're trading outside of the Bollinger Bands today and starting to see a rebound in. And we also have hidden bullish divergence. So there's a lot of bullish things setting up. And could this be one of the next stocks to potentially short squeeze? That's what a lot of people are saying right now, and it's got a lot of people's attention for a possible short squeeze. So we're going to break down the stock in today's video. Now, this right here is the inverse bump and run pattern, right? It's a pattern that not too many people are familiar with. So I do just kind of want to briefly describe it. You have your essentially your prevailing trend, right? So in this case, it would be a prevailing downtrend, bearish trend. And then what happens is you get this massive bump, right? And you see in this case, it's a bump down. And once you break this trend line, you get a run in the price of the stock, right? Where you break this trend line, you come up towards the second trend line, and then you break the second trend line there as well. So we're going to break that down in today's video. I just wanted to show you guys what the actual pattern looks like in case you're not too familiar with it. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. We're also going to use today's sponsor, Simply Wall Street, to actually dive briefly into some of the fundamentals. Simply Wall Street has their pros doing fundamental analysis for you guys. If you're not a pro at doing fundamental analysis yourself, you can get a free 14-day free trial as well as up to 40% off for the first 100 people that choose to buy a membership plan. With that discount code, it puts the annual plan at less than $200 a year. Very affordable in my opinion. I've used them for a while and definitely glad to have them as a sponsor. So here we are on the chart for any, and as I mentioned before, right, we have this falling wedge pattern right here, which I'm sure a lot of people are familiar with. And then we also have the inverse bump and run pattern right here as well. So very excited for some of the possibilities on this stock. And as I mentioned before, it's got a lot of attention for a possible short squeeze. We're also going to take a look at some of the option strikes in here and see if it's a potential gamma squeeze setup, right? And we'll take a look at where some of the high open interest is and where some of the expirations are as well. But before we do all that, let's head on over here to Simply Wall Street. And you can see the financial health is one of the strongest points of this stock right here, right? It's not a dividend stock. It's not a value stock. It's, future growth doesn't look the best and its past performance doesn't look the best. But the financial health here gets an amazing 6 out of 6. All right, you can see that short-term and long-term liabilities, its debt level and reducing debt, both all of these get check marks. It's got a stable cash runway and its forecast cash runway looks good with a 0% debt to equity ratio. All right, that's definitely one of the strongest points of the stock. You can see its short-term assets outweigh its short-term liabilities, and its long-term assets vastly outweigh its long-term liabilities. So that's definitely something that you want to look at here. All right, and you can see, its debt to equity ratio right here. Simply Wall Street has really nice charts and graphs, really just to kind of visualize everything that you're looking at. But they have sufficient cash runway for 1 month based on last month's or the last reported free cash flow, but has since raised additional capital, and it's forecast to have sufficient cash runway for, it says here, 0 months on free cash flow estimates, but has since raised additional capital. Now, the reason it says 1 month and 0 months here is because essentially they have no debt, right? So they're not really too worried about things like that. Again, you can see here, no dividend payment. So, this I would say is one of the strongest suites or strong points of ticker symbol any. All right. Again, you can dive into the valuation, the future growth. You can even take a look at the management and ownership. If you click on ownership here, you can see who really owns the stock. It gives you the CEO, right? You can go over the CEO's salary percentage, their tenure, how their ownership of the shares, 0.5%, and really break down a lot of things for you. You can see the leadership team in here, the board members, the ownership, right? You can see some of the insider trading here. You can see on May 24th, we had some individuals selling shares here. Not a huge amount, right? 11,000 and 7,000 at $2 a piece. That's about 14,000 and $22,000 worth. So, lots of, not lots, but a little bit of insider trading volume here within the last 3 months. Right. And that's just a brief overview. I actually want to go, let's go back over here to our presentation and I want to show you guys this, right? So when we take a look at the open interest here, we can see that essentially there's a really high, relatively high, okay, compared to the rest of the open interest on the other strikes at this $3 strike price. Now, these contracts, they expire on August 18th. So you want to keep a close eye if any, can get above $3 by August 18th. You can see here that that is where the largest majority of the shares are concentrated at, or the options are concentrated at, via this expiration date. So if it can get above there, there is potential for a small gamma squeeze, not a huge one. All right. If you take a look, there's only 733 contracts, open interest total, for the month of August, or for this expiration date here on August 18th. But if we go farther into the future, you can see January 19th, 2024, we see again yet another large concentration at this $3 strike price. But we also see a large amount here at $5. And there's a particular reason why I think there's so much at $5 specifically. But you can also see at $7, $10, and then look at the largest amount of open interest is actually right here at the $15 strike price. So that's very, very interesting. And I'm a little bit curious as why there is this so much attention and so much open interest here on the $15 strike price that expires in January of 2024. So we're going to dive into that. All right, let's go ahead and head back to the chart. So let's get into my bread and butter, which is going to be the technical analysis. We mentioned the inverse bump and run pattern here. So if we can break this top trend line right here, we would be looking for a move up towards our top trend line. Okay. Before we get there, though, there's some important levels, right? We have 218, 243, and 264. Those are going to be very strong resistance levels. I mentioned earlier that we were trading outside of the Bollinger Bands. That's what this gray line is right here. And the Bollinger Bands essentially work as rubber bands, right? So you can see when price action gets outside of the Bollinger Bands, oftentimes the candlesticks snap back in towards the Bollinger Bands, right? You can see over here, we snap out of it, then we snap back into it. Same thing over here. We come outside of it, snap back into them. Over here, we start trading outside of them, snap back into it. So it's not uncommon for price to go outside of the Bollinger Bands and then, snap back inside of them. Now, there are times where it's been trading outside of the Bollinger Bands to the downside, and the stock has continued to go to the downside. So you do have to be mindful of that. And that's definitely going to be a risk to consider. But we formed a nice hammer candlestick today. All right. And, we were trading outside and then we saw sellers weren't able to take advantage, right? Because this candlestick opened here and it pushed all the way down and buyers stepped in and actually closed higher above the opening price, very close to that 218 level. If we can get above 218, again, 243, 264, and above there, 284, those are going to be the major resistance levels that we're battling right now. Okay, we mentioned that we have this falling wedge here too on top of the inverse bump and run. Typically, an inverse or a falling wedge is going to play out in a perfect world scenario, take you up here to about $3, where the beginning of the pattern started. This also aligns with the inverse bump and run. With our bump coming right here, we would break above this trend line and head up towards $3.13. So these are where I think the stock can go, in the short term, if we do get some momentum and if it's possible we get a short squeeze and potentially even a gamma squeeze. Remember, $3 was the high strike price for August. And if we can get above $3 before that August expiration and near that August expiration, it's very possible we could see a gamma squeeze that could drive price up even higher. Right now, I mentioned something known as a hidden bullish divergence. You can see here where we're making these higher lows, right? So, we have a low here, and then we have a higher low right over here. But you see here on the RSI, we actually have a low and then a lower low. This is a simple term known as hidden bullish divergence, and it's an indicator you could see some type of bullish activity. So all in all, we have, about four, I would say, possible bullish catalysts from a technical analysis perspective. We have an inverse bump and run pattern. we have a falling wedge pattern, we have hidden bullish divergence, and we were also recently trading outside of the Bollinger Bands, looking for the Bollinger Bands to snap back or price action to snap back within those Bollinger Bands. You can see here the middle Bollinger Band also lines up greatly with that 243 level. So it'll be really interesting to see if we can get above there and above that middle Bollinger Band, then the likelihood increases we're going to come up towards that 284 level, which is going to be right around the top Bollinger Band. All right. So that's everything I'm looking at on any ticker symbol ANY. Let me know if you guys enjoyed this video. Smash that like button, subscribe to the channel for more.